And admitting everyone now.
Okay.
Welcome everyone to Demo Day. We have a bunch of people streaming in, so we're just going to stay on hold and we'll start right on time at 7 in a few minutes. Thanks everyone for joining. We'll be starting in a few minutes. Thank you everyone for joining. We'll be starting in just about a minute. Well, it's time, so we are going to kick off Demo Day. Thank you everyone for joining. We're very excited for the lab's first ever online Demo Day. And we're honored to have such a large audience from literally around the world. We're recording this presentation for those that would like to reference it later. We had so many people registered, we maxed out on our Zoom, so hello to everyone on Zoom and hello to everyone on live stream. For those on Zoom, we have limited time for Q&A, so we really encourage you to use the chat function to ask questions during the presentation. Each team has a designated person monitoring the chat, so we'll answer whatever questions we can in real time during the chat. The only favor we ask is that once a presentation is over, you end the chat for that presentation and put your focus on the next presentation. So with that, I am delighted to introduce our hosts for the day. We have Barbara Buchner and Vikram Widge, who are our expert moderators. Barbara is CPI's and the lab's global managing director, and Vikram is our senior advisor. Vikram himself was once a lab proponent, so he has been in the shoes of our 8 panelists today. So with that, I'm going to hand it over to Barbara and Vikram.
Hello, everybody. Hello, Barbara.
Hi, Vikram. Good to see you. It would be better in person, though, eh?
Yeah, I wish we were doing this together in the same place with everybody else, but it is what it is. We started this journey a long time ago, and we were there for the first lab meeting together. Then I was on the other side as an advisor, but it's been fantastic to come to today, no?
It's fantastic, I tell you. We would not have expected where we are today when we started that in 2014. So it's exciting also, to have done this journey together, Vikram, and I'm really excited about, today, about our first ever demo day. And because we have so many people joining today who are not familiar with the lab, who are not familiar with what we have seen over the last 6 years, we wanted to provide a brief overview of the lab before we get started with our 2020 class of lab instruments. So just why did we start with the lab? Well, the lab was launched in 2014 to address a crucial gap in how the world tackles climate change, the flow of private capital towards climate-friendly investments in developing countries. And to address the world's sustainability goals, we need trillions in investment, and that amounts beyond what is available with governments and with philanthropy, but the money is available in private capital markets. So the lab was launched really to identify and develop innovative ideas that use small amounts of grants and concessional capital to grow into self-sustaining instruments that create significant impact at scale. And it worked. This class represents the 6th annual lab cycle, and the previous combined 5 cycles developed 41 ideas that collectively have gone on to mobilize over $2 billion in climate action in multiple regions and sectors.
And an example of the many public and private investors that have actually supported the lab instruments to date include Citibank, the European Investment Bank, FMO, which is the Dutch Bilateral Development Finance Institution, the Green Climate Fund, the Inter-American Development Bank, and the World Bank. But why does it work? It works because the lab is unique in bringing a very diverse group of stakeholders to the table to help develop these ideas. It's grown to become a member-supported organizations of more than 80 governments, development banks, philanthropic organizations, and private sector experts who actively contribute to the development of each year's selected ideas.
And yeah, and as you know, Vikram, it is hard work. Our members, along with teams of lab analysts and the proponents for each idea, collaborate on a year-long process to develop truly novel ideas that address existing barriers to investment in sustainable development. But the lab process goes beyond just the idea development, as reflected in today's demo day. The lab and our network enables financiers and policymakers to move these ideas into real action. And moving these ideas into action is even more crucial today than it was 6 years ago when the lab was launched. And this year, I really got to say, our courageous entrepreneurs are launching these ideas under extraordinary circumstances. I think everyone acknowledges that even though significant gains are being made, we have to double down on our climate investment and on the implementation efforts to really achieve alignment on the Paris Agreement, and more broadly, to achieve a just, resilient, and equitable world through the Global Sustainable Development Goals. And if that weren't daunting enough, the COVID pandemic and its economic fallout is emphasizing the importance of job creation and of building back sustainably and with greater resilience. And to get to scale under such constraints, we really need to mainstream climate considerations into daily decision-making. And to their credit, each of the 8 proponents met these challenges, which makes this year's class all the more impressive. So each team really dug deep to pivot on the challenges that were thrown at them, or on the challenges that we were throwing at them, and that the world was throwing at them. And each idea that you're about to meet addresses all these issues, ensuring that they can get to pilot as quickly as possible to make a real impact on the ground. And this is reflected in the collective opportunity presented today.
So together, these instruments are seeking $43 million in grants to launch. As some would say, it's a mere pittance. But seriously, collectively and true to the lab's history of impact, these could mobilize up to $1 billion in concessional and commercial capital, which is 25 times what the initial grants would be. And what would that get us? As you will learn in the rest of this session, significant contributions to many countries' nationally determined contributions and progress towards just about every sustainable development goal. If each of these instruments succeed through the initial pilot together, they would sequester more than 100 million metric tons of CO2 equivalent, conserve hundreds of thousands of hectares of land, generate hundreds of megawatts of renewable energy, and deliver clean, sustainable water to tens of thousands and simultaneously create thousands of jobs. And this is no exaggeration. This is just in their pilots, in fact. Remember, all of these ideas are designed to be self-sustaining so they can continue to grow and be replicated beyond the pilot stage. So now that we all understand the thoughtfulness and the hard work that has gone into developing these ideas and what their potential impact could be, let's get started. But remember, today's format is just the trailer to what is each movie effectively. We hope this leaves you wanting to learn more, so make sure you follow up after. And now for the trailers, we are proud to launch into today's presentations. First up is the instrument from our India stream, the Grove Forestry Smart Ledger. Ryan and Simon, take it away, please.
Thanks, Vikram. Just a quick audio check. Everyone can hear me?
Can you hear you?
Okay,
Yes.
great. My name is Ryan Merrill. I'm happy to introduce you today to Grove FSL. We like to consider a breakthrough technology, connecting mangrove restoration projects to carbon markets and much more. So we can advance through these slides quickly. Thank you, everybody, for joining tonight. As many of you know, and I hope you all learn very quickly, mangroves are critical ecosystems of immense value, storing 4.2 billion tons of CO2 in their trunks and soils on Earth. But today, rampant deforestation of mangroves continues to drive losses of up to 24 million tons of CO2 each year. Despite the overwhelming benefits of mangroves, restoration projects face extremely high barriers to accessing restoration financing. For example, communities attempting to access voluntary carbon markets to fund mangrove projects faced overpriced intermediary fees, opaque brokerage markets, and high costs of tracking benefits over time. For the groups we work with in Southeast Asia, up to 2/3 of the value of each carbon credit is absorbed by middlemen, taking money away from local communities, slowing new work, and too often cutting projects off entirely from funding streams. Grove FSL breaks the value-cost trade-off faced by mangrove communities by combining 3 technologies: remote sensing, artificial intelligence, and distributed ledgers. The FSL uses satellite data and advanced machine learning to enable a low-cost, high-accuracy verification protocol for carbon absorption. Grove then employs this data within an open-source platform that uses smart contracts to reward projects financing, to record projects financing, its operational cash flows, and the verified carbon impacts on a public blockchain. Together, Grove FSL then creates a tailored, or forms the foundation for a tailored blue carbon registry for financing mangrove restoration while automating carbon reporting in an ultra-scalable and transparent manner. Not only are mangroves 4 to 10 times more effective at storing carbon than terrestrial forests, but these projects are powerful catalysts for sustainable development. Mangrove restoration generates community resilience, including positive impacts on female employment and significant benefits for marine life and biodiversity. Here in Southeast Asia, robust space-based carbon tracking shows great promise to connect mangrove projects to a $215 billion voluntary carbon market, where a mere 2% of current trade could reforest over 1 million hectares of coastal green shields. At GMT, our immediate project pipeline can draw in just shy of $40 million in the next year. By 2024, we could be removing 8 million tons of CO2 equivalent by 2045. We founded GMT to create a sustainable solution for financing regenerative forestry while overcoming an oft overlooked challenge of supporting local livelihoods. As orchestrators, advocates, designers, and engineers, we build Grove FSL as an open source project, seeking always to draw in expertise from far-flung corners of the world. We're repeatedly humbled by the energy and the insights a global community of volunteers and collaborators continue to bring to this work. To date, we've built a prototype for Grove and secured a use case for our tech with Handprint, a Singaporean startup helping consumers donate a portion of e-commerce purchases to mangroves, with Grove FSL tracking the impact. This partnership is opening up a completely new way to fund reforestation while enabling our work on the FSL. At Grove, we've got 4 pilots planned just this quarter to regenerate 2,500 hectares of mangrove forest in India, Myanmar, and Indonesia. With the community today, we're now seeking partners to domicile a blue carbon registry in a transnational foundation. Lastly, we're working into 2021 to start using Grove's growing registry capabilities to support a series of blue carbon bonds. These structured products will enable institutional commodity players to fund mangrove conservation efforts at a very large scale. With your help, we can do all this and much more. We're looking for grant funding and grants in aid to advance our technology stack. We're looking for partners interested in adopting the technology and the registry, and we're willing to give our ideas away for free to a partner that commits to prioritizing scale and impact over profit. And most of all, we're looking for organizations who want to fund mangroves today, be it directly through us, via an investment in Handprint in Singapore, or through a blue carbon bond. In the next 3 weeks, we'll hold a series of webinars just detailing how Grove FSL forms the disruptive innovation the world needs now. We would love for you all to become involved, and we look forward to speaking with you each soon.
Thank you so much. I really like this take on sort of the carbon market linked to capital markets. I know Abid Karmali is in the audience, and I hope he takes at least the message of offset straight to the top of the people trying to make this happen by COP26. But more importantly, this particular instrument also embodies the lab's ethos of open source. We intentionally make public all our analysis of each year's instrument so that others can learn and from that and build on these ideas to ultimately scale the adaptation and mitigation efforts that these instruments are obviously focused on. But now for time for a couple of questions, hopefully at least one. So Ryan, Simon, why would you want to partner with a relatively unknown startup like Handprint to achieve this scale?
Well, if I can, I'd like to pass that to my colleague, Simon, and my co-founder.
Hi. So the reason why we're partnering with Handprint is really because we want to unlock a completely new way of financing reforestation projects. What we know from all our studies, and so both Ryan and I have a history in academia, is that these projects at the moment are extremely rarely funded, and they are actually only funded by carbon markets. What we're doing with Handprint is creating a completely new market by enabling companies, small scale and big scale, to simply integrate reforestation into their sales processes. And the interest of the consumers that are going to see these positive impact integrations isn't specifically in the carbon market. So it really is a way of solving one of the big problems in carbon markets, that typically they rely on 3 years of philanthropic funding before forests can actually transform into carbon generating assets. And so what we can do with Handprint is really bridge this initial gap and also activate an enormous amount of the population that currently has no access to reforestation, while they might want to contribute. And also Ryan and I have co-founded Handprint, so it's a marriage made in heaven.
Fantastic. All right. I guess, Barbara, over to you to introduce the next instrument then.
Fantastic, and thanks so much, Simon and Ryan. It's really great to have seen how far you've come with Grove. So looking forward, I can see a lot of interest already in the chat, which is fantastic. But with that, the next instrument you're going to hear about is from our Southern Africa stream. It's climate adaptation notes. And it's my real pleasure to give the floor to Jonathan and Heather. Jonathan, again, also like a lab member from before and now on the other side. So again, over to you both.
Thank you very much. Can you all hear me?
Yes.
Yes.
Thank you for the introduction. I am Jonathan First, one of the proponents of climate adaptation notes, and it is my pleasure to present the instrument to you today. We can get by without electricity, but we cannot survive without water. The number of people without clean and adequate sanitation in our targeted geographic area, the 16 countries of Southern Africa, is significant. The notes hope to meet this challenge by funding resilient infrastructure, recognizing that fiscal-based public funding is severely constrained and exacerbated by COVID. As an alternative, the notes intend to tap into the substantial private sector savings pool, which exceeds $500 billion in the region. As set out in the graphic, the notes are funded through an innovative platform that combines pre- and post-construction finance into a single and seamless instrument, which is credit enhanced by the DFIs. For developers, combining short-term construction financing from commercial banks with long-term post-construction refinancing reduces the timing and financing costs, leading to more adaptation projects being developed. For investors, the instrument allows institutional investors to leverage commercial banks' construction project expertise, facilitating the deployment of significant long-term local debt capital into operational adaptation projects through an asset-backed infrastructure instrument. Commercial banks in turn benefit from this long-term capital commitment as it overcomes their capital constraints under Basel III, allowing them to offer longer, more favorably priced financing. Based on an initial program of $125 million, which we believe is actionable, we have estimated that the projects can increase water treatment capacity by 90 megaliters per day and reaching at least 90,000 people. Access to water and sanitation is a critical priority for COVID recovery, and the notes support progress towards 7 SDGs, including clean water and sanitation and sustainable cities. Financial structures and sources of funding only become relevant with an identifiable pipeline. In the development of the notes, we have, with the support of our consultative group and the reach of the lab, identified a pipeline of $7.8 billion, which is 70 times the proposed pilot program. Big bang approaches seldom work, so we've proposed the phased rollout of the notes, starting with the countries that make up the Southern African Customs Union, which enables the use of local debt capital markets and mitigates foreign exchange risks. Climate adaptation notes is ready to begin the implementation phase as mapped out in the slide. The consultative period is complete, a licensed fund manager is in place, and we have obtained a favorable legal opinion on the instrument structure. Next steps for the pilot implementation are outlined on the slide and are underway. We have consulted widely with 29 institutions during the development of the notes. They represent all relevant aspects of the proposed note structure and its implementation, and their support is unanimous. The proponents of climate adaptation notes, Heather and myself, and both GFA and RBN, provide the enabling environment to make the notes happen. From pipeline development through to fund management and impact reporting, our backgrounds combine investment banking, development finance, asset management, and impact investing. We have this, with financial support, we can leverage $1 in grant funding towards $350 in investment based just on the initial pilot program. After that, the opportunity is exponential with no more sunken costs. A detailed budget will be available to support a funding request. Thank you for your time. Help us make a concept conceived some time ago become a reality. And thanks to the lab, you enable thought leadership.
Thank you so much, Jonathan. And again, I'm really excited to see all the progress you have made. And I think Vikram, you before already said, like, you know, we're also kind of trying to make sure that the COP26 team hears about the lab and hears about opportunities, and certainly adaptation is like on the highest kind of priority list. So I think this is really the first structured funding mechanism to address climate-related water scarcity in Southern Africa. And it does so in a really ingenious way that reflects deep knowledge of the regional debt market. So it could make a real difference in water security for the region. So maybe just a couple of questions, if you have a little time here. I think we all know it's all about action. And I think I was impressed, all the preparations that you've already made, Jonathan and Heather, but when do you expect the nodes to go live? And what are your milestones to go there?
Yeah, thanks for the question, Barbara. So, as you know, we've been working closely in a process with the lab of laying the solid foundation for the CAN concept. But now what we need is grant funding to enable us to bring this concept to market in the next, we estimate, to answer your question, 6 to 9 months. And we really look forward to finding that enabling partner that offers such a strong leverage opportunity. Specifically, we need to develop the platform and establish all financial and impact mechanisms for the nodes, which would also include promoting CAN to the banks, the institutional investors, and the DFI, so that we can launch the first investments.
Okay, I hope that there is lots of partners listening to us now and really hearing your call to action. I think the leveraging factor that you also have shown in the presentation, Jonathan, is extreme. So I think we could really have a really good impact here and a really high leveraging factor. Let me just maybe have a very quick second question as we have another minute here. I think again, what we've seen for the presentation, obviously what I know from the lab process, you have consulted with a number of organizations. What's the main hurdles that you've identified in that process, and how are you overcoming them?
Yeah, thanks. So look, it's been such an interesting experience, and through COVID, it's been a very productive way of working, actually, to develop this. And we've been very fortunate, of course, via the lab and through our own deep networks to access very significant relevant expertise across SADC and the whole world, actually. So yes, we've had the opportunity to both develop and test the CAN concept, and we received some pushback, but mostly a lot of constructive feedback. And of course, along the way, we've needed to refine many aspects. So for instance, at the probing of some of our pension fund participants and looking at their regulatory requirements, we needed to seek legal advice to clarify how the notes would suitably bridge the different criteria across the banks and the pension funds and solve for both. And so we believe this process has really built credibility and initial broad-based support for the CAN concept. And now it's really a matter of bringing it to market. But we've certainly learned a lot along the way.
Fantastic. Well, thank you so much both again. And again, this has been a trailer to the movie, so hopefully there will be lots of follow-up. But over to you, Vikram, for our next instrument.
Thank you, Barbara, and congratulations, both of you, the CAN team at large, for attempting to bring all this together in such a meaningful way. The next instrument is the Rural Prosperity Bond that effectively represents the sustainable agriculture for smallholders in sub-Saharan Africa stream that the lab has singled out for focus. So Sophia and Sean, tell us how you're proposing to use this instrument to help rural SMEs.
Absolutely, Vikram. Hello, everyone. It is great to be with you today. My colleague Sean and I are excited to be speaking from the World Resources Institute about the Rural Prosperity Bond. This is a unique debt instrument to scale up restoration enterprises. Now, let's, if we go to the next slide, perfect. Let's meet one of these restoration enterprises started by Nora. To pursue her passion of helping rural communities in Kenya, Nora co-founded a company that provides irrigation to smallholder farmers. This reduces pressure on forests since farmers increase their output on the same land. Kimathi, as we see here, is one of the farmers who Nora works with. Her company has helped him to boost his tomato yields and to adapt to shifting rainfall patterns in the wake of climate change. Nora is one of thousands of entrepreneurs in the new restoration economy. These are businesses focused on things such as growing trees for food or timber, or producing organic fertilizers, making honey, and a range of other activities. Now, the problem we see is that it's very hard for these businesses to access capital. That's because they tend to fall in the missing middle, where they're too big for microfinance, yet they're too small for institutional investment. And when these businesses don't have the money to grow, then it means that farmers who would benefit from their solution don't have access to it. And this problem has actually become even worse during COVID, because startup funding in Africa has fallen by 30%. At the same time, farmers have become even more vulnerable since acute food insecurity is expected to double during the pandemic, with most of this hitting Africa. And that is where the Rural Prosperity Bond comes in, to essentially urgently get capital flowing to these businesses. The bond will provide small loans that incentivize these companies to expand their services to smallholder farmers. The bond will source pipeline from the Land Accelerator. This is a business accelerator launched by WRI almost 2 years ago that provides training, mentoring, and networking to restoration enterprises. In this short time, we have grown the Land Accelerator to 3 regions and have had around 1,600 applicants. Sourcing from the accelerator de-risks the Rural Prosperity Bond because these are companies who have put through a 4-month training program. Also, entrepreneurs, including Nora, help to design the bond so we know it will work for them. So if we go to the next slide now. Excellent. So Sean and I are extremely passionate about a financial innovation for impact. We have been working for many years on how capital can work better for entrepreneurs and rural communities. Specifically, the bond leverages our backgrounds in investment management and microfinance, respectively. So the impact of the bond is extremely local for farmers like Kimati, and it's also global because we'll be working with businesses in 3 regions. Over 6 years, the instrument will mobilize around $70 million to make almost 400 loans. Analysis by the lab indicates that the bond will empower 840,000 farmers to become more climate resilient and food secure. Around 60% of these farmers are women. Also, the bond will support 18,000 rural jobs, which are more important than ever during the pandemic. We are in the early stages of a journey here and are looking for fellow travelers on this path to rural prosperity. We are currently raising $2 million in grant funding for the pilot phase. Most of this will go into a recyclable loan fund for restoration enterprises. The rest will be used for portfolio management, due diligence, and legal and financial structuring. Given the momentum we already have from the Land Accelerator, the pilot will launch quickly once funded. The bond will enable Nora and other entrepreneurs to serve almost 1 million smallholder farmers such as Kimati. The entrepreneurs and the farmers are struggling during the pandemic, and your support of this instrument could make the critical difference here.
Okay, great. Look, this is extremely inspiring, and I love how the story weaves with real people. I mean, these rural SMEs with their local knowledge and relationships can really make significant progress in sustainable agriculture. So I really like how this instrument amplifies support to rural entrepreneurs that are already making a difference. But a question for you, Sophia, the rest of the team. The agriculture sector is perceived to be risky and therefore has always seen as challenging to finance. I know many of us have struggled with that in the past as well. How do you address that?
Sean, go ahead, please. Thanks, Vikram. Great question.
Yeah, thank you, Vikram. I think there's 3 core ways that we're trying to de-risk the overall system. One is through the land accelerator itself. And this is where, there's a robust selection process, after a call for proposals, and a capacity building process over time, not only in the preliminary period, but also in ongoing mentoring that happens throughout the process. I think another thing to note here is that most of the models that are being supported by the Land Accelerator and then would be supported by the Rural Prosperity Bond are mixed models. They're often models that employ both sustainable agriculture as well as sustainable forestry, making the systems much more resilient, I think, than some of our traditional monocrop agricultural systems of the past. And then the third way we're trying to de-risk it is using new technologies in how we can monitor these systems so that we do have some early warning signs if there are any issues within the portfolio, using drones and artificial intelligence and other kind of remote sensing technologies to marry that with some of the field data that is coming in, to be able to better monitor the success and the lessons that are being learned throughout these systems. Anything you'd add, Sophia?
I think you captured it, Sean. I'll just say that it's been a real journey with the lab to get here, and we're continuously thinking about the risks here and treating it as a very active thing, because we want to make sure that we are being very thoughtful about how we are managing and mitigating all the risks here.
That's great. Look, lots more questions. I'm sure there'll be a lot more follow-up from those who are listening in. But thank you again, and all the best. Over back to you, Barbara.
Great. Thanks so much, Vikram, and congratulations, Sophia and Sean. Really exciting to see. And again, I think all of you just see here, you're really trying to tackle the difficult sectors and the difficult issues in the lab. So it's exciting to see progress on the smallholder issue here on sustainable agriculture. But it's very exciting also to hear about our next instruments, which is from our sustainable energy access stream, Green Street Africa. And so let me just directly hand it over, Cliff and Jude, for you. We're ready for your solar energy solution. Over to you.
Thanks, Barbara, for the introduction, and to the lab for all of their support. Hi, everyone. I'm Cliff Aaron, founder of GreenMax Capital. GreenMax is the sponsor of the Green Street Africa initiative. Green Street is a platform to implement distributed solar generation for large portfolios of public health and education facilities. The COVID crisis has underscored one of the great challenges in Africa. How can it be that over 60% of health clinics in Africa have no secure energy supply? How can it be that still 90 million children attend schools without electricity? This is unacceptable. The World Bank estimates that only $1 billion a year is needed to electrify all of Africa's health clinics by 2030. In the greater scheme of things, this is not a large amount. But the current approach of grant funding these installations has failed. Installations are poorly designed, they're not well maintained, and many have been abandoned. Money is not the problem. What we need is a new business model. Fortunately, such a model exists. The energy as a service approach has been widely deployed throughout other emerging markets to deliver energy services for public facilities. Green Street Africa adapts this tried and true model for the African context. Green Street forms public-private partnerships with local governments to form an aggregation platform that prepares large volumes of solar projects to shovel-ready stage for implementation by private independent power producers, which will enter into long-term contracts with public agencies to supply them with energy services and maintain the power generation systems. We de-risk the portfolio through several guarantee mechanisms. Next, we organize financing via a local currency bond issue in the host country capital market. Finally, Green Street will earn a fee from the IPP selected to implement the project to make our platform a self-sustaining enterprise. We believe this will be a game-changing, sustainable model to dramatically scale up delivery of reliable solar energy services to public facilities. We aim to solarize 100,000 public facilities over the coming 5 years. When the lights are turned on at these facilities, the impact on the SDGs will be enormous. At GreenMax, we have the right background and experience to make all of this happen. We have 26 years of clean energy finance experience across 80 different countries. We've actually developed and launched energy as a service models for the public sector in both the West Balkans and Ukraine. And we have a capable Nigerian team on the ground to manage this enterprise. So what's our plan to scale up? Our Nigeria pilot is with the Rural Electrification Fund as our PPP government partner and with InfraCredit as our financing partner. We plan to solarize 6 federally owned hospitals next year in a $20 million bond issue package. Next, we'll dig down in Nigeria to implement portfolios of much smaller health clinics and schools at the state and local level. Finally, we'll launch in other countries such as Kenya, Ghana, and Uganda. So what funding do we need? Immediately, we need $2 million in grant funding to support our Nigeria portfolio. That's $2 million in grants that will leverage $20 million in private investment. After the pilot, we will be financed with impact investment capital and we'll be seeking $20 million in equity into the Green Street platform. So thanks so much for listening. Please get in touch with us at these contacts and help us bring energy services to public health and education facilities across Africa.
Great. Well, thank you so much, Cliff. And you've really got my attention when you said like money's not the problem. I think everyone knows how important it is and what an urgent issue it is to get reliable electricity to healthcare facilities and to hospitals. So let me just I think we have a little time for a couple of questions. So let me just ask you, I think we've seen clearly you need the 2 million in grants immediately. So, but then you need some kind of government support throughout the process. But obviously you are a private initiative. So how are you kind of addressing the slow pace that's typically expected from governments and how you're dealing with that?
So the great thing is, as a PPP enterprise, we have government inside the local Green Street entity from the start. So government is signed on as a partner, and we have a government agency in Nigeria, it's the Rural Electrification Fund, that allows us to navigate the minefield of the public sector.
Okay, well, that is fantastic to hear. And I think not only the minefield of the public sector, obviously you and your team bring a lot of expertise in this sector, and you know there's a number of risks. So particularly, how are you thinking to address and mitigate the payment and the credit risks that are kind of certainly occurring there?
Let me kick that over to our Nigerian manager, Chudi Uwaje. Chudi? Chudi?
Sorry, thanks, Liz. So very good point, Barbara. Seen as in Nigeria, these the institutions targeted for the pilot project are federally owned institutions. They are already funded by the federal government, and they have dedicated budget line items, including power, right? So the electricity, the power portion is typically covers a mix of grid power from the grid and diesel generators. So this is what we will be, this is what the Green Street program will be displacing. And what we intend to do is to use a sort of lockbox mechanism to commit the budget line items for the power portion of these facilities, not just in the short term, but in the longer term, to ensure that provides necessary comfort that the obligations, the payment obligation will be fulfilled as when due.
Okay, thanks so much, Judith. And Cliff, any final word on this before we move on?
Just to give our best wishes to all of our friends and staff in Nigeria who are going through a very difficult time right now.
Yeah, let me echo that and let me add to that. So thank you so much, Cliff and Judah, for being with us today and for a very exciting program. And let me hand it back to Vikram. Let's move to Brazil. Vikram, are you there?
Vikram, you're on mute, Vikram.
Oh, sorry, my bad. I'm saying go Green Street Africa and totally underscores sort of the wishes for Nigeria. But look, this is great innovation and the much needed impact, very current, very pertinent. So all the best. Now on to the Sustainable Agriculture Finance Facility, one of the two instruments from the Brazil stream of the lab. Pugas and Renato, you're going to tell us more about integrated crop and livestock farming, please. So take it away.
Hello, and thank you, Vikram, for the introduction. My name is José Pugas. I'm the Vice President of the ICLF Network, the proponent of the Sustainable Agricultural Finance Facility. There's the only credit vehicle tailored to upscale the adoption of integrated crop, livestock, forest systems in Brazil. Much is said about investment in low carbon agriculture in Brazil, but are we doing enough? The answer given by the speaker is a clear no. Less than 1% of all Brazilian commodity production is financed by low carbon mechanisms. Scenario will certainly worsen due to the pandemic with the drop of revenue and the increase in expenses of the federal government. Given this lack of investment in sustainable productive practice, how can you promote the adoption of low carbon agriculture in Brazil? SAF is one of the answers to the challenge. SAF is the first rural credit mechanism for integrated crop, livestock, forest adoption in Brazil, a proven methodology of low carbon agriculture developed by Embrapa, one of the largest agricultural research institutes in the world. To fully deliver its value proposition, SAF will be implemented based on some unique features. First, SAF's credit will only be granted to certified low-carbon farmers who are in full compliance with Brazilian social and environmental legislation. Their properties will be monitored by TrustScore, a world-class blockchain-based monitoring system, identifying and reporting real-time on over 120 different sustainability indicators. The most prominent feature for promoting farmer engagement is the TrustScore policy. The social environmental score achieved by the property impacts directly the credit conditions, with a better sustainability performance rewarded with 25% cheaper credit. In 10 years, SAF will spare 90 million hectares of land through intelligent cultivation in the financed properties and mitigate 50 million tons of CO2. The adoption of ICLF will increase farm productivity by almost fivefold and raise the revenue per hectare by at least 130%. In order to accomplish this objective, in January, we'll launch a one-year pilot with $68 million distributed to 900 producers. Within 5 years, we will reach over 10,000 farmers with loans, technical assistance, and property certification and monitoring. To meet this challenge, we have structured a team of champions in their fields. The ICLF networks concentrated 7 leading companies in agribusiness and Embrapa. The fund will be managed by JGB, a leading company in the sector, while Bradesco, one of the largest private banks in Latin America, serves as a trustee. We will register the fund for operation and begin certification of the pilot properties in November. The fundraising process has already begun and will be active until January. We are confident that we can bring returns to investors proportional to the impact generated by the investments. The mechanism is blended finance with 3 levels of investors: philanthropic, concessional, and commercial. All 3 classes of investors will have, as parts of their returns, a proportional share of the carbon credits generated by the instrument. We want SAF to be the first of a new generation of funds that harmonize impact with return, preservation with production. We are aware of the giant nature of our intentions, but we cannot think small. We think that SAF is great to help Brazil fulfill its role as an agricultural and environmental powerhouse. I would like to thank everyone for their presence, and especially to the lab and CPI Brazil for the help that they've given us to make this both mechanism a reality. You can reach out to us anytime. Our emails are on the screen, and check the lab's website for other materials. If you have any questions, please, I'm here and happy to answer them.
Well, thank you so much, Pugas. I do have some questions, but before that, I just want to note that this is such a crucial issue for Brazil. Other countries, of course, as well, where livestock is a vital part of the economy and the food security system. But it's so promising that this instrument combines financing along with this specialized integrated crop livestock farming certification and assistance, right? And so this could be a real win-win for farmers and the economic opportunities and land conservation associated therein. But let me ask you this, I mean, given the sort of fairly sophisticated ecosystem you're trying to put in place, how are you going to be controlling costs to make this program affordable for farmers?
Great question. We are very technological intensive. We have a lot of technology that can really reduce the costs of monitoring, identifying, and verification of the farms, as well as the technical assistance will be based on this artificial intelligence. So we can really improve the effectiveness of the technical assistance provided to the farmers. And since we are talking not only physical technical assistance, but also virtual technical assistance via chatbots that will be developed accordingly to each of the farmer realities. So when we have a lot of technology being provided to the farmer, we can be assured that the costs will be much lower. When we compare the costs of the solution that we are providing with the costs that are already being provided in Brazilian scenario, we are much lower. We are 50% at cost lower than the other solutions that are being provided in Brazil.
That's very heartening to hear and obviously important. The other interesting thing to me was the value of this trust score. So can this information from that be made available to other actors along the supply chain? So there is, sort of value dissemination alongside implementation?
Yes, totally. The information can be shared by the farmer with any of the partners that they select from his value chain. The availability of data follows, of course, the international data privacy laws and will be protected by blockchain. This protects not only the producer, of course, but the user of the data. We will be sure that this data will not be breached anytime. We are doing compliance with data privacy, but also with the data effectiveness and veracity.
Thank you so much, Pugas, for sort of clarifying those issues. This is critical, clearly, and so all the best to you and the team in both raising the funding and implementing this really, really valuable instrument. So over to you, Barbara.
Wonderful. Thanks so much, Vikram, and all the best also from me. Obviously, Pugas, it's exciting to see all the progress, and I think it's also exciting. We've heard very clear indications also from the government of Brazil that this is really something that is in line with the goals that the government has. So I think it's exciting to see progress here, and hopefully we'll manage to help to kick off that pilot very, very soon. But now let's move on to sustainable cities, to a sustainable city stream. We have the Subnational Climate Finance Initiative here. And obviously in terms of subnational finance, we know that there is a massive gap between the investment needs of the current and future urban infrastructure development and the actual investment. So David and Brian, on to sustainable infrastructure, and over to you.
Thank you, Barbara. Thanks for the kind introduction. So I am David Albertani from R20, and today I will be presenting you the Subnational Climate Finance Initiative, which is a program whose purpose is to finance sustainable, resilient infrastructure for cities and regions at subnational level. So as of today, we know that speaking of climate change and SDG more generally, we need to have many investment in infrastructure. IFC expect that we should spend around $500 billion per year to renew and greenfield infrastructure. However, what we've seen in the past is that there is definitively a gap for mid-sized infrastructure. Infrastructure that is smaller than 5 million that we would consider as community-based can be financed through grants and philanthropies. And multilateral development banks, MDBs, DFIs, they usually go for a project above 75 million. And we have a huge financing gap for all those projects from 5 to 75 million US dollar. And what we see on the opposite end is that as of today, given new technologies and the new decentralized installation, more and more of the new infrastructure lies in that space. So we have a total inadequacy between the fund offers and the needs from the ground. Just speaking of waste management, we see that today a lot of the infrastructure needed will be from these 20 to 40 million US dollar. So this is why we try to develop the subnational climate finance initiative, the SNCF, from now on. And the idea is to blend different sources of fundings to tackle these specific issues. So first part is grant fundings into a technical assistance that supports project design, project feasibility studies, and capacity building. And the idea with the technical assistance is to deliver a shovel-ready pipeline of projects. And then the second part is an equity investment fund that blends concessional equity and commercial equity to invest in equity of this infrastructure and ultimately leading to certified climate and SDG impact. Here, what is very important is that all those impacts are certified by a third party. So the type of project that the SNCF is going to invest in vary from sustainable energy, so renewable energy generation, energy efficiency, waste and resource solution, waste management, water access, and also what we call nature-based solution, where we really feel that we want to put a strong emphasis. It can be sustainable agriculture, but also fisheries. As I told you before, every single impact will be certified at fund level. And among them, I just want to highlight that we expect to reduce of 77 million tons of CO2 equivalent during the life of the infrastructure, which is considered to be 20 years. So this program is led by a consortium of companies. First, Pegasus Capital Advisor, a US-based fund manager that will be managing the fund. IUCN, that you all well know, based in Switzerland, which will be the technical assistance manager and provide many input with nature-based solution. R20, so we are a Swiss foundation specialized in subnational networks and subnational infrastructure. We support subnationals to develop, identify, and finance their infrastructure. Gold Standard, also a Swiss foundation, specialized into impact metrics and certification. And at least but not least, BNP Paribas will be the custodian and administrator and will be in charge of the distribution of the fund. Of course, this consortium is working together to the ultimate goal of SNCF. Today, we foresee the technical assistance to be a facility of 28 million and the fund to be 750 million. Among these 750 million, 150 will be the concessional equity. That will be 20% of the fund. That will be a first loss. We've been working for now 1.5 years with the Green Climate Fund. We've been through extensive due diligence. We passed investment committee. We've passed technical panels, and we will be submitted in November, on the week of the 9th of November, to the Green Climate Finance Board. The proposal that will be put under the board is to have 18.5 million of grant for the technical assistance and 150 million of concessional equity for the fund. As soon as the decision will be taken, we expect to go fast and to have a first close as soon as December of this year, at least latest Q1 next year. And we will start to invest in in infrastructures. We'll spend most of 2021 to do additional fundraising for the technical assistance and the commercial equity. So we really believe that this initiative is really transformative and scalable. And I really thank you to all who have been participating today. I'm looking forward to continue and working with you. And please contact us if you have any question on this initiative. Thank you very much.
I think thank you so much, David. And I mean, those of you who know me know that I do love ambitious ideas, and I think this is such a strong consortium of organizations. You absolutely have the network and the experience to make some meaningful impact here, driving really sustainable development, infrastructure projects, and that's certainly something we think a lot about also at CPI with some other projects and initiatives in the city's finance space. I think very quickly, again, I'm excited to see, and certainly fingers crossed for the November board meeting of the GCF. I think ultimately it's all about getting to commercial viability. So just a question, David, on how is the concessional tranche of the GCF de-risking the commercial tranche?
Okay, so Brian, do you want to answer to this question?
Sure, this is Brian Freeman, General Counsel at Pegasus. The way that it's going to work is that 150 million from the Green Climate Fund is going to sit in a junior equity position, such that the private capital that we raise to fill out the remainder of the fund will receive its return of capital plus an 8% preferred return before any monies are paid to the GCF position.
Okay, well, thanks so much. Unfortunately, we're out of time, but again, all the best to the whole team here. And again, I think it is about impact. I think hopefully we can have some first close already by the end of the year, and we certainly hope that others join us in making sure that we continue the fundraising also throughout the next year. So thanks so much to both of you, and let me hand over to Vikram again and go back to Brazil.
Thank you very much.
Thanks so much.
Indeed, and yes, all the best. This subnational focus is critical, and you need all the luck from all of us for your GCF meeting later this year. So all the best there. Now, as Barbara said, on to the second instrument from our Brazil stream, the Connexus Impact Fund. Karina and Rafael, tell us more about your plan of how you are going to green rural credit.
Thank you, Vikram. Thank you for the introduction, and hi everyone, thanks for joining in. My name is Karina Pimenta, and I'm the co-founder of Connexus. And we are here because we are developing this resilient green economy in Brazil, made by people who keep forests standing and protect our natural wealth. And our goal with the Connexus Fund is to channel over $200 million to make finance cheaper and accessible by people in the Amazon and other threatened biomes in Brazil. And how we are doing that? We have this amazing opportunity with the National Rural Credit Policy called PRONAF, which channels over $7 billion every year in subsidized credit for small producers. And only a tiny portion, 2.5%, goes to green value chains. So what we want to do is to change this scenario by redirecting resources from this policy to rural and forest community enterprises that are operating sustainable production systems in the ground. We have already mapped over 1,000 community enterprises that fit this profile, and we know that less than 10% have actual adequate financial services. So we want to develop this market through a blended finance platform, bringing in private capital to help unlock this public capital available. So the Connexus Impact Fund operates this very simple financial products such as loan and guarantees, and combines with a very effective business assistance to generate these resilient enterprises. And also we generate the credit history that lacks on these organizations so they can enter the financial markets properly. And another important piece of this platform is that we partner with the banks that operate the policy in Brazil. And with them, we are creating this network of credit enablers, financial agents in the local areas who can offer adequate credit assistance and technical assistance to producer and community enterprises. So with this platform, the goal is to have a catalytic effect on financial markets and really unlock hundreds of million dollars that are in the public policy to these community enterprises operating within these green value chains. We are already operational, so Connexus has raised $2 million this year to help reduce the economic impacts of COVID on these businesses. And we have already a portfolio of 50 community enterprises, and they represent over 8,000 small producers in Brazil. The idea is that the returning credit from this portfolio will be incorporated into the new vehicle we are developing right now. And with the additional funding we are raising right now, the platform will target specific markets in the Amazon and in the dry lands of Brazil. And in so doing, we are multiplying the number of producers and enterprises connected to the platform, and also helping reduce the pressure on natural resources and deforestation in over 2.5 million hectares in both regions. And to make this happen and happen in scale, we are seeking partners and investors to complete our goal of raising $12 million by the end of next year. We have already secured $2 million for the concessional tranche with these two very relevant anchor investors. And we are in the process of raising this additional $10 million between grants and investment capital. And that additional resource will enable us to complete our origination strategy and also our technical assistance platform. And that, of course, will help us multiply by 20 the number of affordable loans that are reaching out to these target audiences. I'll just end by saying that you have this huge opportunity in Brazil to create this resilient, climate resilient economy. And these are the real people behind the green value chains. But to be really honest, we are running out of time in terms of creating these value chains. So we want, if you want to keep our forest standing, the time to act is really right now. So we hope you join the Connexus platform, and I'm very available to answer all the questions that you might have. Okay, thank you.
Thank you so much, Karina, for that. To be quite honest, these numbers are quite shocking. Both that the ProNAF credit line is more than $6 billion annually, and that less than 3% of that goes to sustainable production systems and forest-based value chains. It's encouraging that you are already starting to distribute funds, but, you know, I mean, tell us more about how, in order to get to greening 100% of this rural credit in Brazil, so what type of producer is going to be eligible for ProNAF, and why is only this small number of this ProNAF funding reaching community-based forest rural organizations at this time?
Okay, so this policy, ProNAF, it targets the small producers, the smallholders, and the policy is made to be accessible for everyone. But in the end, what we have in Brazil is that we develop these conventional systems. Brazil is a very cattle ranching and grains, and it's much easier for our banks and financial agents to operate in value chains they know of. They know the structure, they know how to operate, and there's credit history and history of these producers. What we have with the sustainable value chains is that these organizations are still early stage, and most of them lack the knowledge of how to access the credit lines. They fear the bank is not present in remote areas, especially in the Amazon. And when you go talk to a manager, they don't know how is the cost structure of oil and vegetable oils, for example, or even the timber. We made the first community management timber loan with Bank of Amazonia last year, because that was the first time they lent for community management. And you know, these people manage 40% of the land in the Amazon. So it's amazing that we don't have credit available for those. So the barriers that we see there are basically that you have to create awareness in the organizations and prepare them for that. They have to have the right documentation and the right cost structure and model for banks to operate. And also in the side of the banks, you have to develop the knowledge on these value chains and understand how they work, so you can evaluate risk and you can create the structures to make finance viable.
Right. Yes. And of course, viability is really the key here. I wish we had more time to explore, but maybe if you can take literally 15 seconds and give us a sense of what the expected rates of return might be, particularly for the commercial tranche, and how you might manage sort of the default risk. But short, please, so we can move on.
Okay, we are creating credit histories here. So we created, like, for the senior tranche of the fund, which represents 7% of the capital, we decided to go for a fixed rate of 4.2%. So we can leverage the fund. And we have the subordinated tranche with concessional capital, which will vary according to default rates. Default rates, we are building the history. So it can vary from 9% to 3%, which is our target in 10 years, 3%. So, you know, yields will change as we go and improve our model. Okay.
That's excellent. Look, I mean, I'm sure there'll be a lot more discussion on this. So good luck. This is critical work, and wishing you and the team all the best. But for now, over to Barbara to take us to the final instrument for the day.
Thanks so much, Vikram, and thanks so much, Karina. Again, it's exciting. I don't know exactly why, Vikram, did you get all the Brazil instruments? I'm really excited about, you know, all the change we make in that country. So I just want to again also flag, look, this Connexus, it's already operational. We just got to get to scale. So hopefully we get lots of interest in making sure that we can help Brazil really kind of recovering more sustainable and really making an impact. But with that, last but definitely not least, we have our instrument from our nature-based solutions stream. And again, nature-based solutions, we already heard before and throughout some of the other instruments, how important they are. And as CF already talked about it, but I think again, it's also one of the priority areas that we've heard from the COP26 presidency. So certainly excited to hear about the monetizing water savings instruments now. So Gavin, Maggie, let's hear about water scarcity in Mexico.
Thank you for the intro, Barbara, and hello, everybody. I'm Gaby Morales, and I am with the World Resources Institute. And today I'm going to tell you about a new way to mobilize capital to advance water and sustainable agricultural goals across Latin America. Guanajuato State in Mexico, like so many other cities in the world, is grappling with the lack of water. The situation is exacerbated by inefficient agricultural practices, such as flooding lands for irrigation, like the picture you're just looking on the screen right now. Increasing with that, a wicked water scarcity that at this point is so critical that is forcing farmers to regularly forgo cultivation of even half of the land. At the same time, the nearby cities keep pumping from over-extracted aquifers due to lack of other alternatives, making things even worse. To change this, we have developed a pay-for-performance mechanism between farmers, food and beverage companies, and cities. The solution will provide farmers with access to financing to implement water-efficient irrigation systems, such as drip irrigation, and adopt conservation agricultural practices, such as crop cover or rotation, like the images you're just looking right now. In addition, it would offer technical assistance to the farmers to support them through the adoption of these new practices, and partnerships along the value chain to guarantee the purchase of the agricultural products. The water that is freed up would then be made available for the nearby cities aiming for more sustainable sources of water than their current over-extracted aquifers. By doing all this, we aim to unlock two streams of revenue. The first one from the farmers related to the sale of their products, increased yields, and loan repayments. And the second one from the monetization of the water-saving transferences into the urban centers. When implemented, the MWS would reduce 30% of the water used for irrigation in this region, or the equivalent to 28,000 Olympic swimming pools every year, giving Guanajuato cities access to more sustainable sources and reducing their dependency on over-extracted aquifers as it is right now. More important probably is the fact that just with its pilot phase, this transaction could help improve the livelihoods of more than 4,000 small farmers and their families, giving them access to market, access to finance, guaranteed purchases of the products, and enhanced resilience to face the overall situation, helping advancing at least 6 SDG goals. We are fortunate to say that our team is comprised by a tremendous group of champions, led by the FEMSA Foundation, a food and beverage corporate foundation present in more than 20 countries, Our team includes a state water fund, CSR investors, and numerous specialists in the fields of sustainability, equity investment, small farmer production and inclusion, and agri-water solutions, among others. Our feasibility analyses are underway. And so right now we're working with the state government to select a pilot territory to roll out our first proof of concept to test our assumptions in the field. Then for stage 1, approximately by the end of next year, we will be launching a 20,000 hectare pilot in the state of Guanajuato. And ultimately by 2023, we expect to have a self-sustaining model that allows us to replicate to other places of Mexico or Latin America. For all of these, we ask for your help. At the moment, we are looking for partnerships and complementary grants to support the design of our hedge mechanisms and cover some of the initial transaction costs. And for next phase, by the end of next year, we anticipate that we will be able to accommodate commercial and concessional capital for the $10 million required to roll this out. If you are interested to partner with us or be part of any of these stages, please approach us and stay tuned. Thank you.
Fantastic. Well, thank you so much. And well, addressing water consumption directly is always tricky. This is a real tough sector to attract private capital. So you've done a great job really pulling together an alliance of partners with local knowledge and the networks to get the job done. So while also thinking about how you can really improve the economic conditions and food security, again, all issues that particularly this year, we learned how important the nexus between all these issues is. So let me just try to get a couple of more details to give a little bit more information to all the investors that we have on the line today. So let me ask you a little bit more about how the pay for performance works actually in practice. Back to you.
Yeah, absolutely. First thing to clarify is that we are aiming for a pay-for-performance mechanism tied to practices that we know would reduce the water consumption. So it will be tied to practices and not necessarily the volumetric savings per se, because the latter would require a more sophisticated monitoring system that we don't believe might be viable already, at least at the beginning. And the way it would work is through a special purpose vehicle, which is the monetizing water savings, that would have the ability to offer farmers different packages of solutions tied to different financing terms. So for instance, a small farmer who wants to access the finance, but it's only willing to adopt conservation practices that would reduce the water consumption in a very modest way, she would still get access to the finance and the support to implement that, but the terms of the finance may not be as great as the terms of other farmers who are willing to adopt more transformational activities. The overall idea is that the greater the potential water savings, the better the financing terms, and thus the higher the margins for the farmers themselves.
That sounds okay. Thanks so much. That is very helpful to understand. And I think just and I think I have time for one more question, just because obviously I've said it before. I think a very difficult sector, very risky sector to attract private sector. So what are you aiming for in terms of your risk management, design, basically, and what's the types of partners that you think that can help you to address some of the risks that are existing?
Sure. Well, we're looking for partnerships to help us, take a look and design strategies for two fundamental ends. The first one related to the agricultural portion of the transaction, starting by crop insurance for sure, as standard crop insurance, but also the possibility to assess the setup or the design of a credit enhancement strategy or something along those lines to go alongside the technical assistance. And the second portion, we're cognizant of the fact that the government will play a key role for the bankability of this. So we would invite international financing institutions, MDVs, or similar entities who would want to take a look into the numbers and the relationship with the government to define the feasibility of setting up a more general warranty, something like a political risk warranty, or something along those lines to create enabling conditions and the trust that we believe it would be required to attract the investors, especially at later stages when we're aiming for commercial and concessional as well.
Fantastic. Well, thank you so much, Gabby. Thanks so much to your all your team, and again, all the best to you. And like again, hopefully this was another trailer from a very exciting movie. So let's now get to our end. And Vikram, let me hand back to you.
Thank you, Barbara. What a great way to end this phenomenal set of instruments. Water is such a critical and cross-cutting issue that it deserves all the attention we can bring to focus on it. So we're just about out of time, and the whole thing couldn't have happened without all of you. So thank you to all of those of you who joined, almost 500 participants, and being here to support this year's class of lab entrepreneurs. Can we give them all a big round of applause for all the work that they have done, all the work that's coming their way? So yeah. Each team has provided their contact information, and oh, sorry, this thing popped up. Okay, so let's go to that. A Zoom poll's just been launched, so please go ahead, fill it out. Let's gauge your interest. Feel free to check one, feel free to check them all. So just take a moment and let us know what instruments you're interested in following up. Believe me, they're eager to hear from you. And after going through the lab process, they're also ready to hit the ground running to implement these ideas. So to scale and beyond, you can get additional information, including contact for each team on the lab's website, which is also a link that's being shared in the chat right now. And over to you, Barbara, for the last word.
The last word. I like having the last word, as you know. Well, I think, again, what I want to leave you with, like, invest in these transformative ideas. We will also send out a follow-up email next week with additional information. We'll also have the recording posted on our website. But please help us not only getting these 2020 ideas off the ground, but also let's work together to find new innovative solutions that can unlock private capital at scale. We just opened the lab's next call for ideas, which extends through December. Information and the submission process is available on our website. And again, the link is supposed to be here on the screen as well. We would love for you to help us to really getting the word out and sharing with your networks. This really is vital to our work. It's how we find all the inspiring ideas that mobilize billions in climate investment. And for those of you who have innovative catalytic ideas, we really encourage you to apply, join the lab network, join the lab family. We're all here to make a difference for our planet and for its people. Let's do it together. And with that, we thank you very much for giving us your time and your attention. And from all of us at the lab, a big thank you to wherever you are, and we look forward to continuing being in touch with you. Thanks to all of you. And with that.
Thanks. Yeah, thanks everyone. The polling is still, we had a little delay on the polling, but it's still working. So I'd just like to give people another 30 seconds to respond to the poll.
Fantastic. Yes, please let us know. Again, we want to make sure that we continue to give the support and bring the connections to our exciting 2020 class of lab ideas. And again, we look forward to being in touch with you, not only on these ideas, but also on new ideas. And please kind of make sure that you reach out and you ask us all the questions you need in order to really understand that the big opportunities that this set of lab instruments and lab business models really provide.
Great. The polling is complete. So with that, we will end it. What a tremendous day. Thank you, everyone. Enjoy the remainder of your week. Bye, everyone.
Thanks so much.